Most people think that buying on 30A is a lifestyle decision. The ultra wealthy, they treat it like a tax strategy. In this video, I'm going to show you exactly how high-income buyers are using 30A real estate to reduce taxes, generate strong income, and build long-term wealth all at the same time. We'll cover bonus depreciation, cost segregation, and how short-term rentals can completely change the numbers on a $3 million property or higher on 30A. And if you want me to connect you with the exact tax professionals and strategy that my clients use, just message me tax strategy or drop it in the comments below and I'll point you in the right direction. Let's get into it. Before we talk strategy, you need to understand why 30A is attracting high-level investors. There are 3 reasons. Number 1, limited supply, especially south of 30A. Number 2, extremely strong rental luxury demand. And number 3, this is the big one, you can combine lifestyle and income in the same asset. That combination is rare, and when something's rare, it attracts big money. Here's how sophisticated buyers think about this. They're not buying a second home. They're buying a 3-part investment. Number 1, tax advantages. Number 2, income. And number 3, long-term appreciation. When those 3 stack together, that's when the deal really becomes powerful. All right, let's talk about where most of the tax advantages come from. Bonus depreciation. The IRS allows you to depreciate real estate over time, but certain strategies allow you to accelerate that into year 1. Here's the simplified version. You buy a $4 million property. A portion of that, sometimes hundreds of thousands of dollars, can be written off early. That creates a paper loss. Even if the property is making money, on paper, it can show a loss. And that loss can potentially offset income. This is why high-income earners pay attention to this. Now, very important, this has to be done correctly. You need a strong CPA. This is not something you guess on. Now, here's what makes that work. Cost segregation. Instead of treating the entire home as one asset, you break it into little pieces. Things like flooring, lighting, appliances, outdoor spaces, even pools. Some of those can be depreciated much faster. That's what accelerates the tax benefit. And when you combine that with bonus depreciation, that's where things get interesting. Now here's where 30A specifically becomes really powerful. Short-term rentals. If structured properly, short-term rentals can use those paper losses to offset active income. That's a big deal because most real estate losses are considered passive, but short-term rentals, they can be treated differently under the right conditions. Now again, this depends on your situation, your participation, and your tax strategy. But this is exactly why high earners look at this asset class. If you're looking at this and you're thinking, how does this apply to me? Reach out to me directly. I can walk you through what a deal would actually look like based on your goals, income, tax strategy, and lifestyle. Now let's talk about the income side because this matters just as much. At a high level, a $3 million property might produce $200,000 to $300,000 annually. A $5 million property might push $300K to $450K. And high-end properties along 30A can go significantly above that. Now those are gross numbers, but when combined with tax strategy, the effective return can be very different. Now let me save you from some very expensive mistakes. This only works if you do it correctly. Number 1, buying in the wrong location. Number 2, not designing for rentals. Number 3, not structuring it correctly. And number 4, underestimating expenses. This is not a casual investment. If you're considering buying in the $3 million plus range on 30A and you want to do it strategically, meaning income, tax efficiency, and long-term growth, reach out to me directly. I'll help you identify the right properties, help you connect with the right professionals, and build a plan around your goals. And if you want access to off-market properties, ask me about my private buyer network.